Gold has been desired throughout the history of our planet by almost every established culture as the ultimate symbol of power, wealth, beauty, and accomplishment. Because gold is highly valued and in very limited supply, it has been used as money for more than 6,000 years. It is the most ancient form of money still used today. No other rare metal holds a more visible and prominent place in our society. Gold's luster and brilliance occupies a special place in the human mind. Empires may rise and fall, but gold will always have value. More gold is used today than at any time in the history of mankind. Cultures worldwide revere gold's exquisite beauty in the form of jewelry, metals, and religious importance. Individuals buy gold as a method of safe savings. Corporations consume gold in massive quantities to improve technology. Governments store gold as an indestructible core asset representing the nation's wealth. Investors flock to gold in both booming and uncertain times. In this modern age, it is virtually impossible not to come into contact with gold as it plays an important part in our world. Did you know that gold is used in almost every sophisticated electronic device? From calculators, PDAs, GPS devices, home audios, TVs, satellites, automobiles, to every computer on the planet. Even a mobile phone can contain about 50 cents in gold. As the world becomes more technology-driven, the demand for gold and technology is increasing rapidly. It is truly an amazing metal of the future. The price of gold is set by the unbreakable law of supply and demand. When demand exceeds supply, then prices must rise. In the case of gold, demand consistently outstrips supply every year. The weakening US dollar also raises the price of gold. In March 2008, gold reached $1,000 per ounce for the first time in history. In just the first 2.5 months of 2008, gold has appreciated by 23%. During the same period, stock markets around the world have lost between 10 to 35%. It is normally expected that gold prices go up during tough times. If you had bought gold in January 2001, your gold in March 2008 would have risen 274%. This is an average of 38% per year. Only 50 to 80 grams of gold is found in 1 ton of mined ore. Finding and mining gold is extremely difficult, complex, and expensive. New mines often take 10 years and billions of dollars of infrastructure to begin contributing to supply. Miners cannot increase supply even when prices are high. Annual gold production has not increased over the last 10 years, averaging about 2,500 metric tons per year. In fact, it has actually gone down since 2003. New mines that are being developed will replace current production rather than expand gold supply. At current consumption rates, the supply of gold is believed to last as little as 27 years. Consumption will increase in a high-tech world. Supply is further constrained because some gold is simply discarded and not recycled. Billions of mobile phones, computers, and electronic devices in use worldwide will become obsolete every few years. Each microchip contains a small amount of gold that is often not recovered because the cost of recycling is not worthwhile. Imagine 3 billion mobile phones with 50 US cents of gold in each phone. There are more than 40,000 kilos of gold in mobile phones alone, worth more than 1.5 billion US dollars. 20% of all mined gold is in the National Reserve of the governments around the world. It is generally not intended for sale to the open market. This gold is essentially removed from the open market supply. Gold supply is not going to increase enough to make a difference. The trend price of gold must rise. Amid a stream of bad news regarding the U.S. economy, which is affecting all markets around the world, gold is a glimmering alternative. Gold's ability to insure against uncertainty and instability and protect against risk make it the perfect asset during troubled times. Turbulence and uncertainty are thought to be bad for investors, but not necessarily for commodities. Over the past year, the price of most of the world's commodities has risen sharply and contributed to increased inflation rates. Gold is a proven safe haven during times of inflation. Some of the world's largest institutional investors are heavily invested in gold. All currencies are dependent upon the health of the government. Remember the collapse of the Japanese yen and the German Deutsche Mark after World War II, or the Iraqi dinar after the overthrow of Saddam Hussein? When governments collapse, their currencies become worthless. Gold is still the only real money. Government central banks create money out of nothing by simply printing more paper money. In the world financial crisis of 2008, major governments are injecting hundreds of billions of dollars into the financial system. In the United States, President Bush is calling it the economic stimulus package. But where did this money come from? Nowhere. They just made more money and created inflation as a side effect. When people fear money is made more worthless through inflation, it becomes a major reason why people run back to gold during uncertain times. Between 2001 and 2007, when stocks went up 19%, gold went up 204%. In 2008, when stocks went down 13%, gold went up 23%. Between 2003 and 2008, when the US dollar lost 27%, gold went up 271%. The value of the US dollar has dropped significantly in recent times. This has two big effects on the price of gold. First, most of the gold is mined outside the USA, and the cost of mining is not in US dollars. So it costs more US dollars to mine the same amount of gold, and the price of gold must rise. Second, other main commodities, such as oil, are also produced outside the USA, and these prices will also go up. When oil and food prices go up, that causes inflation. And of course, we know that inflation makes people buy more gold. Gold has risen during both good and troubled times. Gold also rises during inflationary times regardless of a good or bad economy. 53% of world gold demand is attributable to just 5 countries: India, China, USA, Italy, Turkey. India alone accounts for 22%. Rapidly rising prosperity in India, China, and the Middle East over the next century undoubtedly will raise the price of gold. From time immemorial, these cultures have been in love with gold. There will be increased sales of jewelry, investments, and technology such as mobile phones. Furthermore, rising inflation in these countries will lead to investment in gold as a form of protection from inflation. The Islamic dinar is a recently created 100% gold currency that is striving to become the currency of more than 1 billion Muslims. Electronics uses for gold will raise industrial demand by 50% in a decade. When looking at the price of gold, it is important to understand the inflation-adjusted price, which is the price of gold in the value of today's dollars. $1 30 years ago was worth a lot more than $1 today. Gold is still historically cheap, even at 1,000 US dollars per ounce. The inflation-adjusted peak price was $2,300 US dollars in 1980. Consider this. How were the economies of India and China in the 80s compared to today? How many mobile phones, computers, and other technology devices did people use compared to today? Gold demand is continually on the rise as the world moves forward. Look at the percentage increases. If gold can go from $275 to $1,025 US dollars per ounce in 8 years, an increase of 270%, it is certainly possible to rise from $1,025 to its previous inflation-adjusted peak of $2,300, an increase of 124%. With global financial markets and economies in turmoil, inflation growing worldwide, the rise of India, China, Middle East as future economic giants, and the increased usage of technology, the future of gold is shining brightly. Gold is the right asset at the right time. While 2008 and 2009 are expected to be volatile years in general, it does not need to be that way for you. Buying into gold right now is